So customers of ANZ and the other big banks are waiting to find out whether they'll see any of the Reserve's 50-point cut. So far, the Bank of Queensland has made the biggest cut to its variable rate, down to 50 basis points, not down 50 basis points, but 35. Well, the big banks say they're reviewing their lending rates. Damian Smith is the CEO of the financial comparison website RateCity, and he joins me now. So, Damian Smith, roughly how many financial institutions have cut their mortgage rates to their customers?
So far, probably only two in total, Bank of Queensland and then one of the smaller ones. We really think that there'll be a bunch of small movements this week, but the real action will be next week. The ANZ meets on Friday the 11th. They'll do their rate decision, and we think the rest of the big four are most likely to wait for that and allow ANZ to fulfil its newfound role of unofficial price setter for the industry.
But it's not expected they'll drop by 50.
I would be very surprised if ANZ passed on the full 50 basis points. On the basis of what they've done since November, where they passed around 80% or so of what the Reserve Bank did, we expect somewhere between 35 and 40 basis points at the outside is what the ANZ and therefore the rest of the big four are likely to do.
What about term deposits, Damian? Are the banks cutting interest to savers?
They certainly haven't cut interest to savers as aggressively as you might have thought. November and December, when the Reserve Bank cut rates, they really only cut rates for term deposits, using 3 months as an average, by about 0.2%. So that's much less than the Reserve Bank cut. Having said that, do expect to see term deposits and other savings rates come down at a relatively similar clip to variable rates over the next few months. Savers probably have seen the best of times in the last 12 months. Hard to see savers getting as good a deal over the next 6 to 12.
But so far, have the banks favoured savers at the expense of home borrowers?
Absolutely. Look, the banks have favoured two people at the expense of variable rate mortgage holders. First of all, they favoured their shareholders through preserving profit margins and therefore dividends. Secondly, they have favoured savers because they want to continue to build up a large buffer of domestic deposits. So for the 2/3 of Australian households that don't have mortgages, the last 12 months have actually been reasonably good, but people need to be prepared for the fact that those rates will probably come down and variable rate mortgage holders might do slightly better than they have in the last few months.
And once again, bank customers are being urged to move their money if they're not happy with the financial institution they're with. Have you got information about how many customers are actually doing that?
Look, at the moment, it's still a small percentage actually switch their home loans. A large percentage of people refinance, and generally they refinance to a better rate. What we think is typically happening is that people will shop around, find better rates, and then go back to their institution to refinance to a better deal. That's just as good an outcome as switching, but I do expect switching to accelerate this year. The ban on exit fees on variable rate mortgages started on 1 July. It'll really be late 2012 before that takes full effect.
Damian Smith, thank you.